Okay guys, in this series of videos we're going to be talking about prop, what they are, what they do, what benefits they are to yourself. And there's going to be a series of short questions. And the first question is about as basic as it gets. What is a prop firm? Well, a prop firm gets its name from proprietary trading, prop. But it's basically a company that'll let you trade their money.
No way!
And you split the funds between you. In other words, they take on the risk, you take on none. And if I was to give an analogy of it, it's basically like somebody lending you their car when you've got no petrol and you've got a full tank. You drive the same, but now you can get further into your journey using somebody else's fuel.
We got a full tank of gas, half a pack of cigarettes, it's dark, and we're wearing sunglasses.
But the added bonus is, if you crash the car, well, it's not yours, it's theirs. So they have to take on the risk of you driving it, and you just hand the keys back.
It's no use, Ted. You'll never get it absolutely right.
It's pretty much as simple as that. Or is it? Well, the next part of it is kind of how do they work? Well, they work by giving you a test or a challenge to show that you have the skill set to allow you to trade the funds in the first place. Now, the funds we'll get into in just a second because they're not quite as simple as you think. So in the test, it'll be in a virtual account and you'll have to grow a certain amount of money by a certain percentage, because all prop firms have different challenges and different criteria that you've got to stick to. But just to keep figures normal, you'll say, well, you've got £5,000 worth of funds, you have to grow that by 10%. So essentially you've got to make 500 quid's worth of profit. And then it shows that you're able to trade.
It really doesn't.
It really does.
But the caveat is they also want to know that you can handle the risk as well. Now this is where it gets into it a little bit deeper, because you have something what's called drawdown. Now drawdown is how much they will allow you to lose before they'll take the funding away. Now you might have to grow by 10%, but you might only have to lose 5%. So if you lost £251 in one go, the account's gone. So reduces by that amount. And that's it. What's the beauty of it though? Well, they're cheap.
I'd buy that for $1.
This is why beginners are drawn to them. You know, you're giving 5, 10, 20, £100,000 worth of funding. But most people don't have that amount of money kicking about. They might have 50 quid, £100, £500. So what you can do is you take that money to buy a prop fund, and then what you're given is the big leagues money from day one, or so you think, because the big account that you see is actually just buying power. The account itself is the drawdown, because you lose the drawdown, you lose the account sort of thing. That's the way that I look at it, and I've done this now for 4 years trading prop. You've seen me do very well. If you go through the channel, you see me trade all the time. And am I reasonably good at it? I'd like to think so. I've done it for 20 years and I make a good living out of it. Now, that's roughly what a prop firm is. Now, what you've also got to remember is, why are people totally attracted to it? Well, that comes down to the marketing, because prop firms know how to market. Trust me, they know how to market. They'll show the huge accounts that you can have. They will show the payouts that's been offered. You know, 100% payout. This guy's done 20,000. This guy's done 50,000. This guy has a 300k account. This guy has a 600k account. And I'm talking from my own experience. But the account means nothing. The payouts you should keep an eye on. And Are you going to do it in week 1? No, that's where the challenges are for. They are there to slow you down on purpose because they want to see that you're good.
Let's see what you got.
So that's kind of the reality check and who a prop firm is. Are they worth it in this day and age? Yes, they definitely have that place. Personally, I only really look at one prop firm, which is the Fivers. If you want to try it, there's a link down in the description in the comments. I've used them for 4 years and I've never had an issue getting paid from them. But their programs are pretty fair. And I think fairness is where you need to look at it. And that's why you've got to look beyond the marketing and just basically drive your car the way you would normally drive. And reap the rewards from the bigger account that you have. Because if you've got 500 quid and you buy a decent sized prop, your drawdown might be 1500 quid. So your return on investment is already 3 times greater. I hope that kind of makes sense into what the prop industry is. Now, I will do more and more of these. So you can build up a little catalogue and we'll go through the journey. But I think at the moment, when you're looking at TikTok and all the flash ads, always look behind them and see what your capabilities are. Because remember this with the prop industry. If you haven't got the skill set, it doesn't mean to say it's easy.
Fuck no!
It's not. Because what you will do is you will edge your money away. So in that sense, I'm going to go back to the Fivers because I think they did a really good thing. They brought in what's called a boot camp. Now a boot camp is where you've got to go through 3 challenges in order to get your funding. It's really cheap at the start. You know, it's not much at all, 75 quid, something like that. And if you pass for the 100k, you pay the remainder once you've passed. If you don't pass, you don't pay anything.
Really?
Really?
Now, that is excellent for training wheels. It can take you through the journey. But just as we end this up, a prop firm is essentially, they put the money up, you bring the skill, and you work together as a partnership and you split the profits. Now, when it comes to 100% payout, people go, well, how can it be 100% payout? It's easy. You trade the account and they just mirror it. So you get the profit out of your account, they get the profit out of their account, and then it's a win-win scenario. And it doesn't matter if the funds you're trading are what's called virtual funds or real funds. The only thing that matters is whether or not you get paid at the end of the month when you request your draw out. That's it. You know, if you request your £500, your £1,000, and they pay it, that's all that matters. The process of trading is identical. Hope that helps. If you're stuck, I'm very easy found. Drop your questions down in the comments. I answer every single one personally. And if you go onto my website, scruffytrader.com, all my contact details are there and you'll be speaking directly to myself. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.